Imagine getting into an accident, getting slapped with $1 million lawsuit, and then realizing your insurance doesn't actually cover a dime of it. Yeah, it's a terrifying thought, right? But without the right protection, that absolute nightmare scenario could easily become an everyday reality out on the road. The stakes for commercial driving are just incredibly high. And a massive lawsuit? Well, that isn't just a little bump in the road. It's literally a business-ending event.
Welcome to this explainer. Today, we're taking a deep dive into primary liability insurance for truckers. Now, I know insurance can feel like just another annoying legal hoop you've got to jump through, but today we're going to flip that script. We're going to look at how it's actually your ultimate business-saving playbook. Whether you're an independent owner-operator just grinding it out, managing a small fleet, or running a massive trucking enterprise, understanding this coverage is absolutely crucial for protecting your hard-earned assets from catastrophic losses. Okay, let's dive into this. Here's our roadmap for today. First, the crucial financial shield. Second, what is actually covered. Third, mind the exclusions. Fourth, legal minimums and costs. And finally, securing the right policy. All right, kicking things off with Section 1, the crucial financial shield. So what is primary liability insurance exactly? Basically, it's a commercial policy that covers third-party damages if you're ever in an accident. And why does this matter so much? Well, because it's required by law for all trucking businesses in the U.S., especially if you're operating interstate or transporting for hire. Without it, you cannot legally operate. Period. End of story. But beyond the legal side of things, without it, you are personally on the hook for those damages. We're talking medical bills, massive legal costs, and potentially straight-up bankruptcy. And, beyond just physically operating your rig, holding the right coverage builds essential trust. It's your reputation on paper. Clients, brokers, partners, they absolutely expect it. If you don't have it, you aren't just risking financial ruin if there's a crash, you're actively losing valuable business opportunities because brokers simply won't load your truck. Moving on to Section 2, what is actually covered? So let's look under the hood of the policy. Third-party damages break down into two distinct categories. First up is bodily injury liability. If you cause an accident, this is what covers the other party's medical expenses, pain and suffering, lost wages, and your own legal defense. Second, we have property damage liability. If your rig damages another vehicle, a building, or any infrastructure, this side of the policy covers those repair or replacement costs. Let's put this into perspective. Imagine you're navigating a busy intersection, and boom, you accidentally rear-end a passenger car. The driver gets injured and needs hospitalization. Without coverage, you're looking at paying their medical bills straight out of your own pocket, and that could easily exceed $100,000, plus their legal fees, plus compensation for pain and suffering. But with primary liability, your policy steps in. It absorbs those costs up to your limit, protecting both your personal and your business assets. Now let's look at property damage with a pretty catastrophic scenario. Say you're on the highway and you accidentally clip a bridge support. The damage is severe. Next thing you know, the state hits you with a repair bill for $500,000. I mean, a $500,000 bill would ruin almost any owner-operator literally overnight. But if you have this policy in place, it absorbs that ruinous out-of-pocket hit, totally sparing you from a financial wipeout. Okay, let's pivot to Section 3, mind the exclusions. Before we go further, I really want you to ask yourself this right now. If you get into a wreck, does this primary liability policy actually cover your own truck? The hard reality check here is absolutely not. Primary liability is strictly for third-party damages. Here are the major exclusions you absolutely must know. Number 1, damage to your own vehicle. If your truck is mangled, primary liability pays exactly $0 for your repairs. You need separate physical damage insurance for that. Number 2, cargo damage. It does not cover the freight you are hauling. You need motor truck cargo insurance for that piece of the puzzle. And number 3, your personal injuries. If you get hurt in the crash, this policy won't pay your medical bills. For that, you need workers' comp or personal injury protection. The takeaway here, you've got to secure these separately to be fully protected. It's like a giant puzzle, and primary liability is just one piece. All right, let's talk numbers in Section 4, legal minimums and costs. So the mandated coverage amounts actually jump drastically based on exactly what you're hauling. The FMCSA has strict minimums. The lowest bar sits at $750,000 for general freight. Think electronics or dry goods, usually operating intrastate. Step up to interstate freight, meaning you're crossing state lines, and you are required to hold at least $1 million in coverage. But look at that massive jump to $5 million. That level is required if you're transporting hazardous materials like chemicals, flammable liquids, or explosives. Basically, the higher the risk to the public, the higher the minimum shield required. So, what actually dictates your premium price? Well, insurers look at a handful of key variables. Freight type is a huge one. Specialized or hazardous freight just costs more to insure. Then there's truck type and size. Refrigerated trucks or flatbeds, they might run you a bit higher. Driver experience is also absolutely crucial. Newer drivers or folks with a bumpy driving history are going to face higher premiums. And finally, your operating location plays a massive role in how they assess your risk level. To give you a concrete number, for owner-operators, the average yearly cost typically sits right between $3,000 and $5,000. But let's look at how location and freight actually impact this. An owner-operator out in California hauling refrigerated goods, they might pay around $5,000 a year, mainly due to the higher cost of living and all that dense, high-risk urban traffic. In contrast, an owner-operator running general freight out in a rural state like Iowa might pay closer to $3,000 a year. Location matters, for sure. And of course, it's important to note that if you're managing a larger fleet with multiple trucks, those comprehensive coverage costs are predictably going to scale up. Fleets can easily expect to see costs ranging anywhere from $10,000 to $40,000 or even more every single year. Bringing it home with Section 5, Securing the Right Policy. Okay, here's your actionable blueprint to lock in the right coverage. Step 1, assess your specific risk exposure. Are you doing long hauls or sticking to urban routes? Are you hauling dry goods or high-value sensitive cargo? You gotta know your risks. Step 2, get multiple quotes. Never, ever settle for the very first offer. You need to negotiate with brokers to get the best deal, and always check what limits your specific clients and shippers actually require before you accept a load. Step 3, work with a specialized trucking insurance agent. They speak our language and can tailor a policy that fits your exact operational needs. Now, as you go through that process, beware of these incredibly common mistakes that often cost truckers their entire livelihoods. The biggest error by far? Underinsuring. Blindly settling for the absolute FMCSA minimums just to save a few bucks on your monthly premiums will leave you horribly exposed. Another huge mistake is failing to review your coverage annually. You know, as your business evolves, your risks change too. And finally, not understanding your policy exclusions. Ignoring the fine print, that is a straight-up recipe for disaster. As we wrap up this explainer, I want to leave you with one final, urgent thought. Go pull out your current paperwork today and ask yourself honestly, are you truly shielded? Or is your business just one bad accident away from losing everything? Don't let a tiny gap in your coverage become the end of your road. Stay safe, stay protected, and keep on trucking.